Okay, good morning, guys. Let's go ahead and get this stock market technical analysis out the door. Show you guys what I'm seeing this morning. We do have an inflation reading coming out this week. I believe it's coming out tomorrow, so we'll keep an eye on that. That's obviously likely going to move the market. Again, the market is all trading. Everything about this market is trading on what the Fed's going to do. All right, and so any kind of reading around inflation can sway the Fed one way or the other, or at least the market's anticipation of what the Fed will do. And so that's key. Starting it off, guys, we'll look at triple Qs. I'm going to start off with the weekly chart. I'm going to narrow it down all the way down to about the hourly chart. Triple Qs, guys, on the weekly chart, and this is going to be a pretty messy chart because obviously it's going back quite a ways, but here's your negative divergence on the weekly right there. Negative divergence on the weekly indicates that we're probably in for a longer term move lower, a trend lower. Now, again, this is to start of 2022 and pretty much all of 2023. You can see, if I can grab the right tool, you can see that we basically were marching up here. All right, had a brief little pullback and then a continuation. This is really over the holidays right there. And that continuation up higher was the divergence. All right, when you popped over and made those new highs, that was basically the divergence that started to build. So negative divergence on the weekly. Now, that's not just a sign to get short, all right? Divergence is never a sign just to get short. It's just a mere condition. So the fact that we have the condition of divergence tells me that, okay, sometime soon we're going to, likely start a new trend. And that trend should be lower given that it's negative divergence. But doesn't mean we want to get short yet. So let's get down to the daily. Okay, on the daily chart, you'll see basically a couple things. All right, narrowing it down. This is your rally that we have. This is the holiday rally. It started back in October, but it was just kind of that steady march higher. Again, I talked about how there was no reason to short because we just continued to march higher in really low volume holiday trading. I took some time off, and just wasn't putting out a ton of videos at that time. But again, we had a sell signal and a breakdown. You could call that, but definitely that was your breakdown there for sure. Very clean breakdown of that trend line on the 2nd of January. And really the selling started earlier, but nice clean breakdown on the 2nd of January. Okay, so we pull back. Now, we've got some support just below. Support is about 392.50. You can see on the daily chart, there's former reactions right in there. So I think we're heading down there, but it was pretty obvious that, usually if you're going to just have the first level of support, this was just nonstop selling. Seemed like, okay, we're probably going to have a little rally and then go on down to that support level. And so far, that's what we've seen. All right, we've seen the rally. I think we can go up a little bit more, and I'll dig into that on the hourly chart. Let's get into that. But, after we rally, I do think we are heading down to that 392.50 area. Let's go down to the hourly chart. Okay, so you'll see here on the hourly, we basically, if I clean this up a little bit, but here's your bullish divergence that started to show up on the hourly. Right there. You see how the momentum was starting to rally right here, all right? And price was kind of going lower, chopping lower. That's bullish divergence, indicating that you're likely going to see a rally, at least in the short term. And then sure enough, gapping up and just nonstop buying, okay? So that was in the charts. We could see it with that divergence that was likely the highest probability thing to happen, and sure enough, it did. Gap down today, but again, we have this gap. There's a couple gaps really just one gap, but there's gap entry right here at 406.05, and then gap fill at about 408.62. So those are both targets, potential targets for this rally. I think there's probably a high probability that we're going to hit at least one of those targets at 406. So here's how I see it going. I think we can continue to rally up to gap entry, maybe a little struggle there or a pullback. We might only go there and then pull back to that 392. Or if it wants to continue, you could rally up to 408.75 and then pull back. And then, yeah, that's probably about as far as I'd be willing to let it go before anticipating the next move lower. So obviously, we'll see how the charts look when we get there, but those are the two levels I'd be zeroing in on, 406 and about 408. And then we should continue the next move lower. Going back to the daily chart again, you had this uptrend line here, you had the uptrend, and that trend was broken. Okay, so it does make sense that you're going to start to pull back and see some more downside. Yeah, that's what I'll be looking for. And flipping over to Apple, a lot of this just comes down to Apple. I did point out in the private member group that the time to buy, if you're bull, was back here on Friday. And I made a post there saying, guys, we're hitting the 200-day simple moving average on the daily chart. And this is where the bulls are going to step in and buy. The algorithms are programmed to buy at the 200, and it's just kind of the mechanics. So there it is, right at the 200, and there is the buying that followed. So I think there's a little more buying. Again, we've got this gap right here overhead that, you know, resistance right now looks to be about 187.38, and then you've obviously got the gap fill, which is sitting at about 191.83. So either one of those levels would likely be kind of a final bounce target on what I think is a counter trend move. The other thing is, you know, on Apple, your former high right here, this is kind of your former high. You broke out, all right, you made a new high, but it did have negative divergence on the daily chart right there. And that breakout has failed. So it is sell the rip in Apple, all right? And you can see it gap down. So I think that, you know, you rally into these key levels of resistance, and that's likely going to indicate the next move lower, all right? But maybe a little more upside before we start to sell off. Okay, a couple different trade ideas. JP Morgan, you can see, I'm looking at an hourly chart right here. So on JP Morgan, you got support, and this thing's just been kind of just, you know, almost parabolic, just straight up basically with really virtually no pullbacks. So this is support. And then you do see that we do have negative divergence here on the hourly chart. So it's indicating that a reversal is likely. And then as of today, this looks like a sell signal. You can see, well, this is actually, sorry, as of yesterday. So they sold it towards, and then they stepped in and bought it. But it you know, it still was a breakdown on this hourly chart. So that is a sell signal on the hourly chart. It's not as clean looking on the daily. So that's the only thing that's giving me pause. If I look at the daily here, you can see on the daily chart, the price action of yesterday, it's not a sell signal on the daily chart. They closed it pretty much right there at support. And, you know, what you want to see is impulsive selling. And really, if you're trading a daily chart pattern, you want to see impulsive selling on the daily chart. So I'm still waiting. I'm holding off on this, waiting to see if we get some sort of impulsive selling, and really looking like we're going to get that daily close with that selling. And then that would be a sell signal on that one. So just keep an eye on that. Okay, and someone has asked me to cover Tesla, so I'll take a look at that one. Tesla, bigger picture, obviously you have a downtrend, all right, and I've got it kind of marked out with all these little hashes, but we're in a downtrend, longer term downtrend, all right, that downtrend, we're in a bear market in Tesla. It started back in November of 2021, and Tesla is down, as of right now, it's down from that 44%, and obviously at the lows it was down a lot more, but we're continuing to trend lower. That's the bigger picture. Right now we're just at the 200. We're just kind of holding the 200. So I could see the buyer step in here. I don't see, you know, there's not really any divergence on the daily chart either. I mean, when I look at, you can see here momentum is dropping off. You could say maybe slight divergence right there. It's not really there on the PPO. It's pretty mild. So I could see another move up to the trend line, maybe putting in a larger divergence. So at this point, that's probably the way I'd be leaning. Obviously, you break the 200, an impulsive break of the 200 would be a sell signal. So keep an eye on that. But right now, just holding above the 200. So I don't see any sell signal. Okay, gold. So this is GDX. We are now at that trend line, or again, like I said, potential trend line. I've kind of really tried to be clear about that. I have 1, 2, and right now, if you get a reaction here, we'll have 3 data points, and that's really what you need to help define a trend line. You can't just connect any 2 points and call that a trend line. So the third data point, if we get a third reaction, we could watch this as a verified trend line. The more reactions, the better. 3 is the minimum. And if we don't get a reaction and we just continue to sell, then it's not a trend line. So that's really the key. I did notice, briefly, there is some negative divergence here on the GDX right there. So that's a divergent high. And we did get a pullback to this potential trend line. So keep an eye on that. That's what I'm really waiting for, is like verification of whether that's a trend line to follow or to not really care about. So we're there now, but then Newmont looks like it broke that trend line. Now we did have 3 reactions, 1, 2, and there's third right there. We did have some negative divergence showing up, just kind of briefly. So as of right now, that is a break of the trend line, and it looks like a sell signal. We probably are going to come down for a back test of this. Sorry, I had to get my chart right. A back test of this wedge. All right, you can see support. This was former resistance. Lots of reactions here. There's another one. There's another one. So to me, it looks like that's where we're heading for a back test of that wedge, and then that would be some support down there. And depending on where that hits, let me grab this. It's, you've got a reaction low right here. So I assume it's going to be about 36.80 down to about 36.40 or somewhere right in there, mid 36 area. Oil, nothing technically changed. We're still in this downward channel here on oil. You can see this is oil futures, and we continue to just kind of move down this channel. So until we see a breakout, there's no change. And I don't even have any divergence now. So I think what we're going to do is probably come make new lows down here about 67-ish, put in some bullish divergence. All right, so I'll be looking for that. And then what I'll be looking for as a buy signal would be a break of this trend line. All right, that's how I see this thing setting up. And so we're just watching that one for now. Real quick on wheat, no technical change. This is the wheat ETN, so it tracks the futures. Again, bullish divergence. It's been there for a while. We've got kind of a basing pattern. We're basically stuck in this kind of sideways range of consolidation. It's bullish in general. This is a bullish chart. It's got, we're not moving up, we're not moving down. We've got bullish divergence. I think it's going to break out, sometime soon. And when I look at the futures, this is the wheat futures. You can see we're kind of pulled back to support. All right, you've got, this was former resistance right here. It's about 597.5. So that's resistance, right? You break out and back test support, and so that's support now. So this one looks like it's kind of bear flagging too. You can see there, and the flag's getting a little long, but if it starts to run soon, it'll be okay. But it's at support. So again, I like wheat. I think it's a good long. It's objective, and it's technically looks good. Just need that breakout. Okay, Nvidia had a big day yesterday. It was up about 5.5%, 7% or something like that, up a decent amount. That is a breakout. As of right now, you can see there's your former highs, resistance, and a breakout. So that is a breakout. As of right now, we do have negative divergence on the daily chart. We'll take a look at the hourly, but you can see the momentum has been dropping. And even if I zoom in here, you can see that the RSI starting to kind of turn down. If you turn down and you start to make kind of that lower hill right there, it's just going to be a continuation of the divergence. If I see that, I'm going to put good probability that this breakout will fail. Okay. So that's what I'll be looking for. And then obviously on the hourly chart, let's take a look at that. See if we have the hourly chart looks like the momentum made kind of a new high. So no divergence there on the hourly. So this might need to kind of back and fill a little bit. Maybe you wanted to come down and then do that. This might, might trade up here for a little while. So nothing to really do. I mean, if you're long, obviously you could just stay long. Just be mindful of that divergence and be mindful of, if you get a trend line break. But again, this trend has held. All right, I've talked about this trend and I said, until this trend line breaks, there's no sell signal. There's no reason to short this thing. And until this breaks, you're probably not going to see the market really break. It's one of the Mag 7. Okay, I don't see too much more that's really interesting and that's really changed from today. So I'll get the video out there. Drop me a thumbs up on your way out if you're interested in the private member group. Link in the description below, and I'll catch you guys on the next one.